Welcome back to Power Lunch, everybody. The Magnificent Seven surging this year on the back of an AI craze. Those seven tech stocks nearly doubling so far in 2023 compared to a 7% gain in the S&P equal weighted index. Our next guest thinks generative AI should keep pushing these tech names higher, but has a hold on one key mega cap in the space. Let's bring in Ben Reitzes, the Melius Research Managing Director. Ben, welcome. Good to have you with us. I see you, among the choices that you have put buys on in these various stocks are three that sort of surprise me. One is Intel, two is Cisco, three is IBM. Why do you call them buys, but Google, AMD, Oracle, and among others, holds?
Well, nice to be with you, Tyler. It's been a little while and great to be back. I think that there is a halo effect that's going to take place where right now we're in a big training phase of AI where NVIDIA is taking an outsized gain of the market, and we're very positive on NVIDIA and think they're going to benefit, frankly, from all stages of AI. But what is going to happen, in our opinion, is that a lot of the spending is going to shift towards the enterprise, where enterprise companies want to tap their data into trained models and use those for applications for the enterprise where they can do inferencing as well. And we think that there's a halo effect that'll take place on other names. For example, IBM, what we think is near term, we're not looking for much upside. But as we get into 2024, a lot of companies are going to want to know what models they want to pick for training, how they want to do it, how they want to prepare their data. And this is tough stuff. And IBM consulting and software for highly regulated industries is going to probably do a little better as these companies need help. Cisco, as enterprises spend on AI, look to get insights from applications, are going to need networking. And we think that the expectations for Cisco are super low. It's 12 or 13 times earnings. And for Intel, we think PCs and servers can benefit as well. And Intel can react violently to the upside if there's a PC channel fill. And laptops are echoing the great demand of 2020 right now and into next year. So I wouldn't be surprised if PC data points start to look a lot better and Intel's prime beneficiary.
Why specifically are you hesitant on Google, or at least holding back on it?
Well, we still have upside to our target and like Google. A couple things about Google is their cloud is doing great, but they actually have the lowest cloud margins of the big three. It's only 2.5%. When AWS was at that phase, it was well into the 20s at this revenue. So actually, cloud is not a positive mix shift for Google. The other thing about Google is we don't know what's going to happen with search. I know there's a lot of pundits out there that want to say search is going to be this or that. I don't think anybody knows. We know that AI is going to search for outcomes, though, for certain things. You're going to want to speak into a bot and get a result. You're going to say, my budget for the trip's $800. I'm going with so-and-so in my family. Produce an outcome. Search could change in that regard, and I just don't know how it's going to do it. I think it's Google's to lose. They have great data, but if I can't figure it out, I'm not sure anybody can. So let's see how it plays out.